All right, let's get on with the presentation because this is about the 5 master keys to trading discipline. And the first thing I think we have to understand is why do traders resist training for their trading discipline? Why so much time on the Holy Grail? Why so little time on what we're doing as individuals? Well, you got to take a look at yourself, and I think that's tough for some people. Admitting that they've done something wrong, forgiving themselves, and then going on with their life in a more positive and more directed way. But that looking at yourself and taking responsibility, these are areas that we can tend to resist, especially as traders, as we're looking for the right answers. And as soon as we get even a small win, we're experts again, and we don't have to pay any more attention to trading discipline. So, and you see where that's gotten you, some of you who have done that. I know I have done it, and I knew where that got me. That's why I've changed, and I'm telling you, life is a lot easier when you have a process, when you spend as much time on trading discipline as you spend on trading plan. It's easy to blame the market. Again, it's part of not taking responsibility. The market did it with me. They took my stops. I love that one. Oh, they grabbed my stops. I've even had people show me proof that the traders go. But I've been next to, and I've been down on the floor of the exchange years ago so many times that these people don't have time to hunt for your personal stops. So, and of course, too lazy to put in the work. I think that's probably the least of it. I think it's believing that the work will actually do something for you. And I'm going to go through what some of that. It's not even work. Some of the process. I mean, you're putting in work. You call analyzing charts work? I don't. So this wouldn't be work either. It gets to be kind of fun. And of course, priorities. Finding the Holy Grail is more important than dealing with trading disciplines. Well, if you're struggling with some of these things that I'm mentioning here, and you can admit just for the next 35 or 40 minutes that maybe it's time to pay more attention to trading discipline, I think I can give you some stuff right here that can help you and are actionable right now for you to do without spending a penny. Okay. The first master key is a sound trading plan structure, because many of the mental and emotional afflictions that traders have is because they don't believe in their trading plan. Your trading philosophy is the first thing that you have to decide on. What do you believe in? Now, with me, you're going to see when I talk about my simple trading plans that I'm a big believer in candlestick analysis, because I believe the market's emotional. And I've always looked at me, the unemotional, disciplined trader, taking money from the emotional, out-of-control trader. That's how I see it. And boy, ever since I see it, I've started seeing it like that. That really helped me to spend more time on the trading discipline part, because it's really started to work. And candlestick analysis, to me, the color of it, the idea, the origin of it, you can read about that somewhere else. It's all over the web. Of course, we show it to you in our plans and the simple trading plan that we're coming out with. But the idea that candles show the emotion of the market. It was originally started by Japanese farmers hedging and so on. But the fact that it takes into account the highs and the open and the close as the two most important features of a particular time bar made sense to me. Makes sense to me. I mean, it's where most people are waiting for the close of the bar to do something. If it breaks out or completes a formation, then you can act on something. And we're not alone on that. So the open and the close are very important features to the candlestick analysis, and I believe that. It makes total sense to me that the opening of a bar is important because you're making your move, and the close of the bar you don't have time. You either make your move or you don't. So those are the two critical points. Everything in between, you're kind of waiting for the candle to begin or the candle to end. I like that. I like the fact that candle formations. So I believe in it. Candle formations make priority of the open and the close. And Fibonacci, I mean, that's a universal law. I mean, who am I to doubt that? I mean, I think I'm a pretty smart guy, but I'm not that smart. I'm not that smart. I'm smart enough to realize that Fibonacci is a universal law, and if I'm going to fight it, I got to be an idiot. I got to come up with some other opposing universal law, and that's not going to happen. So you have to decide for you what you believe in, because if you doubt your trading philosophy, then you're not going to. It's going to be the core of doubt in your sound trading plan structure. Of course, trading psychology. You need to, in a trading plan, I want to see you make it part of your trading plan. Have a section for it in your plan. Statement of understanding of how important it is. Something simple, but I don't think your trading plan should be void of a trading psychology mention or commitment. So I like to put it in. I like to see you put that in there. We're going to talk a little bit about journaling in a second. But so those are two very important features to make sure that you have a sound trading plan. As far as the trading psychology part, it's part of your trading system. You need to talk about the time frame that you're dealing with. Long-term, swing trading, intraday. These are the kinds of things that you need to define as far as your trading plan is concerned. Because, again, you're constantly looking at yourself first and saying, where am I at? See, I generally don't like to take risk home with me. So I am an intraday trader, not an intraday trader, unless it's a long-term stock that I have or commodity that I have long-term feelings about, and I'm working off a long-term chart. I have, for instance, I'm a believer in certain disruptive biotechnology stocks. Organovo I've talked about before, OMV. I'm not recommending that to anybody. I am a holder of the stock very long term because I believe that 3D bioprinting and the company that is going to replace your kidney and liver with your own that print you one out at the hospital and put it in without any rejection, this is a company that I want to get in back of. So again, I do some things on an intraday basis long term, but I'm trading. I don't like to take my risk home with me. So you have to decide where you are in the different parts of your trading life. Risk evaluation and control, different for each time frame. If you're taking on intraday trades, your risk is you got to take on fewer positions, and because your risk is going to be longer per position when you're working with a longer time frame charge. You got to work all of this out. And if you're very adverse to risk of or losses above 1% or 1.5% or 2%, you probably have to stick to intraday or swing trading. So again, these are the questions that you have to ask yourself because they affect your trading psychology and therefore the way you construct your trading plan. Of course, your analysis, fundamental or technical. What are you, a fundamental analyst or a technical analyst? Well, I just mentioned I'm both. I'm buy and out. I'm buy analysis. And I know I can get married in this state, being that. So, being a fundamental and technical analyst, a technical analyst is mostly what I am. But when I have long-term ideas, like I just mentioned on Organovo, I do that. That's fun. That's fundamental. I love the idea one day. I looked at the chart. It looked like it was a reasonable place to buy. I bought it, and I'm holding it for as long as it takes. So, you have to decide what kind of trader you are in that respect. And, of course, your entry and exit strategy. You notice I put exit in capital letters because exit is the most important thing. You should be spending at least 2/3, if not 3/4 of your time on your exit strategy, not your entrance strategy. In fact, I don't know if you remember that guy, I forgot his name, but Robert Allen. He used to parachute himself into a small town and with just a driver's license and $20. And by the end of the day, he said he would own a piece of, he'd buy a piece of real estate, no money down. Well, I've often thought about making the challenge that if go ahead, you put me in anything, enter anywhere you want in a trade. Just tell me you're in, and from there, let me take over the trade, and I'll manage the exit strategy. And I believe I can be successful. Even though you may try to get me into places where you don't believe it's going to work out for me, I believe I can manage the exits. I've become very good at managing the exits because I am unwilling, and you should be too, unwilling to take a big loss. I'm unwilling to stop my positive momentum as a trader. And that is an area where you have to pay prime attention to having a positive mental state as you're trading, believing that good things are going to happen to you. And when you take a 10% loss on the trade because you're an idiot enough not to put in your stopper, and I say that with love because I've been that idiot too, that's going to punch in the solar plexus, and that's going to take away any positive attitude you thought you may have been creating. So, exits. exit is more important than entry. I mean, get in right. And entry gives you an edge, but it's not what's going to make you money in the market. Okay, so a little bit of continuation. The elements of the trading plan should be to define your entry signal, define your stop level and position sizing, and I just did a little bit of mention on position sizing about long term, whether you're trading with a daily chart or a 5-minute chart. If you're looking to manage risk, you can take a lot more contracts if you're or shares if you're working off a 5-minute chart than you do a daily chart. You understand that. So you have to define your stop level and position sizing. Determine your exit signal. Again, mention the importance of that. Define your uncle point. In other words, there has to be a point where you're going to give up and say, hey, this is not working out. And for me, though that point is I wait for all of my triggers on entering the trade are candlestick triggers. And if it's a candlestick trigger, then usually it's the bottom of that trigger formation or the top of that trigger formation if you're shorting the market. That is my uncle point. It's a place where I say, hey, I'm not willing to take any more risk. And I say an uncle point because I don't want you moving that stop. I don't want you, where it dances around one tick above or below your stop, wherever you're long or short, and you're saying, God, it looks like it's going to just hit me and then go on, and you want to kind of move your stop just away a few ticks. Don't do it. You have an uncle point, stick with it, because again, defining your risk and making sure that you stick to that definition is the most important thing you can do in your trading. Not only does it stop you from having to recover that loss at a higher percentage, that thing when if you lose 50%, then you got to double your account to get back to even. It stops that phenomenon by keeping your losses very short, and it saves you positive mental state. It saves you positive momentum. Because when you're out of a trade, one door closes and another door opens. Okay? Just a door that closes, another door opens. So define your uncle point. Make sure the uncle point is not something that's going to punch you in the solar plexus. Okay? Here's a master key 2. So trading plan having a solid trading plan has to be your master key 1. Master key 2 talks about the proper risk and management employment. Now, I take more of a macro view of risk and money management. There's the trade level, which is the yellow box on the bottom. The trade level is the trade that we're negotiating right now. You buy a couple of 2 S&P E-mini contracts, and you put in your stop and you put in your target, or you have your trailing stop scheme wherever you're going with your plan, and you manage your trade. And so what you're doing is you have your absolute uncle point, let's say, in that particular trade, where you're not willing to risk more than 1.5% or 2% or maximum 3%. Nobody should ever go over 3% on an individual trade, I don't think. I've never seen a trading plan where it's prudent to do that. So the idea is you manage your trade at the trade level. But if you're like me, I mean, sometimes I'm long an S&P index. I trade the futures a lot. I do some stocks, but mostly around the futures market, the E-mini S&P. But I'll see a gold trade, and I'll take a gold trade while I'm in the E-mini S&P trade. And if your trading plan is simple enough, you can do that with ease. So I make that happen, and now all of a sudden I have to be concerned with a portfolio level risk management. And the reason I say that is because at any moment in time, I don't want to take a punch to the solar plexus. So if I have a maximum, say, 3% risk on a trade level trade going on, and I take on a gold trade, my portfolio level trade risk is 5%. In other words, if I'm in 2 trades, I know that the highest probability is probably 1 loses and one wins, and there's a low probability that both win, lower probability and both lose. But so because I've entered another factor into the equation by taking on the second position, it's now a portfolio level situation, and I won't take any more than a 5% loss at any moment in time in my life, in my trading life. So if I have a 3% risk already designed in the E-mini trade that I took, then I'm limited in my gold trade to 2% of my trading equity risk. Okay, so I think you understand what I'm saying there. So I'm managing the portfolio level risk because, again, the absolute most important thing is that I stay positive in my trading and I don't take a shot to the solar plexus. And 5%, and that's a semi-shot. I generally don't play in that area either. I mean, if I'm taking a 3% trade, I generally won't even look for a second trade. But if that first trade comes in at 1 or 1.5%, and I take that second portfolio, that second trade, and now I'm looking at a portfolio risk trade, then a set of trades, then that second trade could be I can go to that maximum 3%. Now, just because you take a 1% trade risk on, say, the E-mini trade, the first trade that I talked about, it doesn't mean you can go ahead and take a 4% risk on the next trade because you've got a 5% portfolio risk level. You get each attempt that you make, each trade that you make has to be limited to 3. And when you start putting on more positions, you have to make sure that even the total number of positions, and sometimes I'll have a couple of 1%ers on, I can take a third trade that could be as high as a 3%er if I wanted to maximize that. But there's no greater feeling than having 2 or 3 trades on where your entire portfolio risk is about 2.5 to 3%, and one is starting to really go well. I mean, that's the position you want to put yourself in, and that's exactly the position you'll put yourself in more often if you more concentrate. If you take a look at your proper risk levels and what it's going to do to your head, and keep in balance. Now, I threw in another business level because as you get older, I think you start to think about retirement and so on. And I guess I may never retire. I thought when I was younger, I thought I'd be retired by now, but it's too much fun right now. My wife says, as long as you believe you're helping people, stay at it, and I believe I'm doing that. And I love to do that. So I'm still in business. When I look at my business as a whole, I look at my and I look at my life as a business in this particular example. I look at my life. I look at my futures account. I look at my stock account. I look at my retirement account. If you have those things, and I manage. I don't want to take a total risk of any more than X percent. It's going to be different for everybody. But I'll give you one example of the action I've taken. What I have done is I have a particular futures account that all I do, or the vast majority of what I do, is short the S&P, the E-mini S&P. And I do that as a hedge for my retirement account. The thing is, I don't manage my retirement money. My retirement money involves a mix of bonds and stocks and preferred stock and things that I'm not an expert at. And it's more of a balanced approach. So that's doing its thing. But I also know that when the market takes a hit, that account takes a hit. And so I have the capability of being a pretty good technical analyst, and I have some simple trading plans that work for me, especially in situations like that. So when I see a strong turn to the south in the market, I can put on a small hedge and offset my entire life's portfolio. So, the whole idea of this slide is that don't focus only on the trade risk that you're taking, what's in front of you, the E-mini and the gold contract you have on, or this bunch of stocks, or the Forex, or whatever you're doing. Don't leave the context. Always consider the portfolio level and the business level, because we're dealing with money here, and we're all entrepreneurs, really. And this is what an entrepreneur does. He takes his, because when you do this, believe me, it's much more calming. Because even a 5% loss in a trade, when you know you've got a pretty good retirement thing going, you can calm down a little bit. You're not focused that much on one thing. Okay, so I hope that I've been talking a lot without asking for any. Are you enjoying this so far, Kristen? Can you give me write in the text box and just tell me if you're enjoying this. We'll go on, but I just want to make sure that. Kristen, can you tell for me? Maybe not. Okay, maybe on a break. Well, let's keep going then, because they haven't shut me off yet. All right. Again, just another slide to give you a sense of what's important when it comes to risk and money management. Again, I don't put a lot of emphasis on entry. You know, and that's kind of good, because a lot of the anticipation and anxiety for a lot of people is entering a trade. I think you can be a little looser. I mean, it's not good. If you're going to be loose anywhere, be looser on the entry. Okay. So again, knowing yourself. If I'm got a type A person that really likes the action, I'm looking to really train them hard on exit strategy, really hard on exit strategy, and let them be themselves. Let them express themselves through getting in quickly. So they'll have several entry strategies. Now, if you have 4 or 5 different entry strategies, you're going to wind up seeing that 1 or 2 of them work better than the other 3, but you use the other 3 just because you need to be in the market. So ideally, what you want to do is stick to the A trades, the ones that are the highest probability trades. And those, of course, are going to be the ones that have worked for you most in the past. And you're going to see that as you journal and take a look at your past trades. So entry is important, but it's the least important of the money management triangle, so to speak, or how you manage a trade from a risk standpoint. Position sizing is an art in and of itself. And in our Simple Trading Plans course, I'm going to actually be having a couple experts in on position sizing. In fact, this particular chart comes from a guy named Paul King, who's really good at his understanding, I think, and I've robbed his understanding pretty much of the importance of risk and money management. In fact, for our Disciplined Trader course, he gives the presentation on risk and money management. But position sizing is the next important thing. I think it's more important than entry, because you can't take on too many positions. If you take on too many positions, you're going to be too excitable. You're going to you're prone to being out of control. And of course, your risk increases. But on the other hand, if you take too few positions, you're not maximizing golden opportunities. So the idea is, if you have an A+ entry, that's the time to possibly put on your maximum position sizing. So the power of the entry and its past performance for you, not only back test, but how you forward tested it and real tested it over time. You see that when that happens, then maybe your position sizing should be on the higher end of your limits. And if you're somebody who tends to be a little looser with their entry, and it's a B trade, which I don't suggest that you're doing, but some of you have to do it, B+ trade, then look to reduce your position size. So it's like a volume control. That's what Mike King says. He talks about position sizing as a volume control. And of course, the exits are, to me, and I think any seasoned trader is going to see that half the battle, if not larger. I just didn't want to scare you with more of the triangle here. But the exits are really where you want to spend most of your time. So I've talked about that enough. All right, Master Key 3, reversing poor mental trading habits. This is, again, it's all about us and our ability to control ourselves so that we can run our trading plan with ease. We've just talked about how to construct a trading plan so that you can have confidence in that trading plan, because what good is being mentally and emotionally fit to run your trading plan if your trading plan sucks? Okay, so it's not going to suck now, because now you've analyzed yourself on the kind of person you are so that you can easily run your trading plan. Then you've paid attention to sticking to high probability entry points, not paying so much attention to the entry points, but enough to identify the ones that have worked for you in a high probability, keeping your position size under control, and then concentrating and focusing on your exit strategy. Okay, you do that, you're going to be fine. Now it's all about you. Okay, it's not about hunting for a better system. Even a good system will make you plenty of money if you can control yourself and run it properly. Okay, the root of trading habits, good and bad, it can be summarized in this sentence: what the subconscious mind holds as true dictates how your conscious mind will make decisions. Your conscious mind is what will make your decision. But your conscious mind looks to your subconscious mind, what's underneath the surface. Your conscious mind secretly looks at your subconscious mind for the answer to a question. So if you're having trouble pulling the trigger on a trade, trade sets up, you have trouble, and you get the stimulus to pull the trigger on the trade, but you can't get yourself to do it. The market runs up. That was your conscious mind asking your subconscious mind, telling you, "I'm ready. Oh, should we pull the trigger?" It's giving me the signal to pull the trigger. Should we pull the trigger? Your subconscious mind may hold a belief like, "Hey, you just all lost 4 in a row pulling the trigger. Why don't you take a break? Isn't it time? Isn't it late for lunch? Maybe it's time for a rest. Why do you have to jump in this so fast?" And so you're hesitating because of your lack of belief in the long-term value of your trading plan. And so your subconscious mind is now holding that this protectionism is true for you. So when your conscious mind when you get the stimulus, your conscious mind looks to your subconscious mind and it tells it to hold off. Well, what we realize in a conscious state is that, "I can't believe I missed that. Why didn't I just take that? And I can't believe I hesitated again. It was right there for me." And it's because now you know it's true for you by watching the decisions that you make. Okay, you know it's true for you by watching the decisions that you make. So if that happens to you a lot of the time, then you have something, you don't believe in your trading plan enough to pull the trigger every time. Okay, and you need to go back and take a look at your trading plan and do some things, and you need to train your subconscious mind not to hold that hesitation is true for you. You need, and here's how it works. Here's how you train your mind. You have to put your conscious mind aside and dictate thoughts to your subconscious mind directly without the conscious mind filtering it out. And the way you do that is to take several deep breaths. Sitting in your chair, take deep breath in, deep breath out, into the count of 5, out to the count of 5, into the count of 5, out to the count. I'm describing to you meditation, self-hypnosis, whatever you want to call it. It's a way that you drop your brainwave state into an alpha brainwave state, where then you can accept suggestions directly to your subconscious mind. And what I mean technically about that is you're creating neural pathways, nerve tracks that carry the message that you're giving it. So if you relax yourself and you play back an audio, and we have all these audios for you done, and you can record one yourself and play it back, but you have to state it in the right way. I believe in my trading plan because it was created to fit me personally. When a trading signal is given to me, I take it immediately without hesitation because I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I'm going to say that last sentence again because that's a sentence I want you to have. If there's nothing else that you say to yourself, I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And I'm saying it in the first person, and I'm saying it present. So those are the kinds of structures that you need when you're feeding your mind these things. So breathing in and out, feeding positive statements to yourself, and creating these neural pathways. Through repetition, you will create enough neural pathways with that same positive method that serves you as a trader, enough to form a neural net. A neural net is your dominant response to a stimulus. So if you were responding the way you were before by hesitating in my last example, and then you took a week and you trained 8 or 10 times for 7 or 8 or 10 minutes in a relaxed alpha brainwave state, and you submitted these new concepts and ideas that serve you in your mind. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. I believe in my trading system because it's solid and it's a winning formula for me over the long term. I know that trading is comprised of winnings and losing, but over the long term, my trading plan will work for me. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. Whatever it is, those ideas are being formulated and being stamped in your subconscious mind. When the neural nets are enough, neural pathways are enough, becomes a neural net. Now, when the stimulus happens, your conscious mind looks to your subconscious mind and says, should I take that trade? You say, yeah, I'm a wise disciplined trader. I do the things that I, boom, you take the trade, okay? So you need to work with your brain. This is science. They've taken scans of this and seen what happens when you're in alpha brainwave state and when you have these messages submitted. Things light up. This works. I mean, this is what, I don't know if there's a high jumper. His name was, he's in the 50s or 60s. It wasn't a Fosby flop. It was a guy, he was a blonde guy, but he used to, and most high jumpers do this actually. You can see them before they're high jumping. They stand in one place. They're kind of moving their legs up and down, but their head is bobbing. Boom, 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 and then they go like that. You can actually see them taking the run to the pole and then the jump on their head. They're playing it in their minds before they do it. This is the same kind of thing. Tiger Woods is known to be a self-hypnosis nut. And he probably used a little bit more of it lately. But this is what got him to where he was. His father taught him the power of the mind. We are athletes. You're a trading athlete. Okay, and it's time that you appreciate that about yourself. But an athlete is never going to win any accolades and awards unless they train. And for we traders, it's about training your mind. Okay, so it's enough on. I hope that wasn't too confusing for you. I can't really see your response from here, but let me go on. So the master key is trade your subconscious mind with the thoughts and beliefs supportive to you as the disciplined trader. Again, I'll say it. I am a wise and disciplined trader, and I do the things that a wise and disciplined trader does. And hey, I love that so much. Listen to this. Oh, it must be out of batteries. Yeah, I guess it's out of batteries. We have something, if you go to my site, you'll see I haven't used it in a couple of weeks. We have what I call the flashpoint button. It's like an easy button, and when you click on it, it's my wife, who's our mental training person in our firm. Tisha says exactly that. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. So whenever I feel a little bit anxious or whatever, I hit the button, and it says a wise and disciplined trader. So if you go to thedisciplinedtrader.com, you'll see it. I don't know what we charge for $29 or $39 or whatever, but it's a really fun thing to have. In fact, there's the audio thing. You can hear the voice as a little sidebar. But again, it's all about your mental state. All right, so let's go through some of these subconscious characteristics. We're going to check the time. We've got about 15 to 25 minutes left. So there are 9 subconscious characteristics under this Master Point 3, and I'm going to go through them quickly because I spent a lot of time here in the intro talking about some of them. Strength to pull the trigger. Okay, this is about taking action. If you're hesitant about taking action, of course you know what can cause that series of losses, lack of belief in your trading system, so on. It's all about acting on your conviction. Can you believe? Can you believe to yourself that it's going to work? And so that's an important thing. The subconscious characteristic 2 would be overcoming thoughts of fear and greed. And let's take the fear first. Overcoming fear of losing again. We know that that's an issue. Proper perspective on winning and losing. I've mentioned that. In other words, you've got to take a macro view. We know that. See, I'm ready to take that short. Because my losses are so short and small, I'm ready to take more. I mean, I have plenty of trading plans in the past that I've run that have more losers than winners and do just fine because I'm out. Unless these triggers, and I think you'll notice this about your own trading, if you use just about any triggers, if a trigger doesn't perform right away, it usually doesn't. So I like to take partial profits right out of the box on the trigger, like on the next bar on most of these trading plans that I run. And that gives me a little in my pocket and reduces my risk at the same time. And if it goes, it goes. If it doesn't, I've taken a small loss or a small gain or an equal. I'm looking for the big move in many of my trading plans, and I'm willing to have no result. And so I have a lot of it, no result, big result, 5 no results, and then a big result. That's fine with me because I can stay positive and energized, and I don't miss opportunities. It's when you start to fear that you shut off your computer and you'll open it up again, and boom, there was a trade you would have had if you didn't have to take a mental break because you were losing it. So got to stay in control. Okay, so I really like short losses, small losses. And I don't mind missing big trades just because I got stopped out early. I left that behind a long time ago. because for every one of those, you'll stay in the trade too long and take away the profit that you had because you think this is the big one, because they're all the big one when it's moving in your favor. Avoid greed. Avoid feeling bulletproof. Keep your target orders in. In other words, I do like limit orders, especially on that first position that I talked about, taking a short profit. I just believe that that taking short profits along the way is another way to stay mentally composed and mentally strong. Again, you can see the emphasis I'm putting on this because, listen, 92% of traders, and this was taken from somebody who years ago, there were a couple of different studies. They went into a transactional firm's records. They blocked out the names, but they saw that 92% were losing. Staying the same or losing, not winning, but losing. Most of them were losing big or blowing out their accounts. Only that 8% are winning. And if I'm talking, well, my presentation is on mental and emotional issues, but if you're not paying attention to the mental and emotional issues, this is what you have to do. This is it. This is it. You've got to spend at least as much time on training your mind and doing the things that keep you positive about your future and so on, than you do on finding the Holy Grail, which is a journey that will never end. Okay, keeping the targets in order, avoiding. You don't want to get cocky. It's worse. Fear is worse. Fear will keep you out of trades. Greed will kill you. So, and if you stay out of too many trades, you'll kill yourself. So either one, you'll be dead. But figuratively speaking, not. Hopefully not. I didn't cause anybody to consider taking their life. All right. Trade to make money would be characteristic 3. I'm going to go through these quickly. Keeping this in the forefront, making the right moves. But here it is. Trading is not for your ego. It's not proving to others who you are. I mean, I used to go to parties and people would ask me what I do, and I'd say, well, I'm a trader. Oh, you're one of those guys that, I would sheepishly say it because I know the reaction. Oh, you guys causing all the problems in the market, especially when the market's down. They always blame traders for doing it. So, I got to take myself out of it. I don't trade for ego. I'm not trying to prove. I'm there to make money, and it's a business, and I'm an entrepreneur, and I train as an entrepreneur. I take entrepreneurial courses because, well, it helps me in my trading, the disciplined trader business, and you got to have a business plan to have an online business. But before that, I was taking entrepreneurial courses because I would apply those ideas to me as a trader, and I think you got to do that. It's not for your ego. You're there to make money. It's a business. Keep your, nobody in a restaurant is going to risk 10% of their capital keeps it open on a piece of fish. I mean, it's not going to happen. Maybe Nova, but not most fish. But you get my point. I can hear some of you laughing out there and some of you saying, what the hell is he talking about? So let's go to the next slide. Visualizing success as a trader. You got to see yourself as a trader, not trying to be a trader, especially people that are starting out. And thank you, especially for the beginners who haven't made their first trade yet, or have only been burned just 1 or 2 trades, for taking the time to spend some time away from the Holy Grail hunt and into the mental and emotional issue factor. This will serve you 1,000%. But right from the beginning, you are a trader. You put the money in your account. You're risking your money. I mean, if you what is that? If it smells like it and if it looks like it, don't step in it or whatever. But if you look like a trader and you're acting like a trader, you're a trader. You're not trying to be a trader. You're not learning to be a trader. You're not half pregnant. You're there. Okay? You as a trader must you are now a trader. And you do so, and not only are you a trader, but say it with me, I'm a wise and disciplined trader. And I do the things that a wise and disciplined trader does. And you're going to do the things that a wise and disciplined trader does because you're going to be like every other human being, moving in the direction of your most predominant thought. And your most predominant thought is you as a successful trader. And you need to visualize that. And and you do it the same way. You're also creating general neural pathways. It's kind of like taking a multivitamin for your head. You're moving in the most direction of your most predominant thought. I take those deep breaths, and I've described this to my people a number of times. So I'll just limit it to 60 seconds. But I'm on a yacht. Everything is all white in the yacht. I'm dressed in white. The ship is white. The water's light blue, but the dock is kind of white. And I'm sitting on the back of the yacht on a small, round table on a beach, kind of a beach chair, with those canvas strap, canvas fold-out chair, and it says everything but director on the back. And I'm in a white linen suit with a white hat, and I have a martini, and somebody comes up to the it's usually a young girl, comes up to me and hands me my trading, my trading for the day, my sheets of my daily statements. Just handing me my daily statements, and I'm smiling, and I thank her, and I lift my hand and I wave to the guy, the captain, and he takes me off on the private. I know we're going to Bimini or something because I live down here in Florida. That's my vision of my success. Okay, I'm moving in that direction. And that's where I want to be after all this is done. And I'm getting closer and closer. And the reason I'm almost there is because when you have these ideas and you let them nurture in your mind, and you're consistent about these positive thoughts, what happens is that you in response, it's like you get alternatives presented to you to get there. And as long as you're a good decision maker and not afraid to make a bad decision, you can make a bad decision like a bad trade, and you can only lose 1%. The door closes, another one opens. I'm still saying, I'm still a winner. I don't let things get in the way. I want that vision to happen because that vision is me. And the vision became me because I spent the time to see myself in it, put emotion into that scene, feel good about that scene. And so when I don't take a trade, or I consider moving a stop, I think to myself, that's not going to get me where I want to go. That's not going to get me on that ship to Bimini. So I'm leaving my stop in. And those kinds of thoughts happen in a split second. So there are general ways to work with your mind. There's specific thoughts to work with your mind, but it's all the same, building neural pathways enough to make neural nets to become your dominant thought and therefore your dominant behavior. Okay. I see we've got about 15 minutes. So let's 15 minutes or a half hour. Taking loss. Characteristic number 5 is strength to take losses. The action plan of letting losses execute. Again, I've learned to love to take losses because that means I can get onto another trade that will work. And if you think about it, I was thinking about this the other day. If you take a small loss, you get out quicker, and therefore you can grab the next opportunity quicker. That's a kind of a crazy, interesting way to think about it, but that's the kind of crazy, interesting, positive thoughts that you have when you put your mind on the right track. Not how else am I going to lose? If I do this, will I lose too? That's the wrong track. Hey, I got out of 1%, took a little bit of a loss, no problem. Where's the next trade? Where's the next setup? Because I have a new opportunity. Because now I don't have to worry about that. I don't have to deal with losing. That was a losing trade. Let the other guys work on that. I'm on to something new. Okay, losses are part of the process of winning. Strength to take your losses avoids the devastating huge loss. Again, it's the dovetail to the most important thing that a trader needs to have, and that's a positive mental attitude about their trading. And you get that again from having a strong trading plan and having strong wherewithal, discipline to run that plan. When you have both, you got it all. That's what those 8% have. Okay. So strength to take your losses avoids the devastating huge loss. Don't take the devastating huge loss. You want to unravel yourself. You want to go in the wrong direction quicker than any other thing. Take a huge loss. Take a 10% loss. Take a series of 10 or 15. Go revenge trade. Do all the things that you may have tasted before and committed to yourself. And thank God that you have not taken that huge loss. But if you've just taken one recently, forgive yourself. Go on. It's a business event that you can get over. You'll find more funding and you'll work with the funding you have and you'll do it right. Because I'm telling you, trading accounts can build just as fast as they can self-destruct. So you just have to get it together between the ears. Okay. So strength to take a loss is a very important characteristic. Characteristic: sustaining focus. Focus is very important. Okay. Multitasking is overrated. 90 minutes on, 30 minutes off. A lot of people have an issue with maintaining the focus for a long period of time. I'm one of those people. But I realize about myself, but I'm pretty good at 90-minute increments. And I've learned to discover that I'm not uncommon. Even type A's like me, borderline ADD guys and gals are, they can focus for 90 minutes in the heat of things. So if I've been trading for an hour or an hour and a half and I'm out of a trade, I don't take on I take 30 minutes off and then I approach it again. And listen to me, there'll always be a trade out there. You're not missing anything by taking a break. Believe me, you're not missing anything. It'll be there for you when you come back. I mean, unless you're waiting for a particular setup and you're waiting for another bar to close, that's a different situation. But you don't want to start from scratch and start looking through charts when you've been trading for an hour and a half. At least for me, I like to take short breaks and honor myself. Okay, exercising patience. Probably I would say those people that I've worked with over the years, this is the one turnaround characteristic that has changed everything. The ability to wait for the A trade, to give yourself that entry edge, not to get in just because you have to understand that not taking a trade is taking an action. Once you understand that fully, then it's very easy to wait for A or A plus trades. Those high probability trades that in the past have gotten you optimum results or have gotten the trade off to a great start. Okay. In my case, I just needed to get off to a great start because I'm taking my profit on a partial position on just about every one of my trading plans. That may be something for different for everybody depending on your plan. But the idea is you've got to work on your patience. I hope you're enjoying this. I can't see any feedback, but I'm feeling the vibes. I'm feeling the love. So let's keep going. There are 9 of these. This is the 8th one. Sustaining discipline. Trading is they've heard it before. Trading is a marathon, not a sprint. So you want to maintain your trading discipline as a routine. Now we have on the Discipline Trader Mastery Kit, which is the product that we've sold for years. It's the quintessential mental training program in the world. I think nobody's going to argue with that. Hits on all these points and gives you mental trainings for each one of them. And these are 7-minute mental trainings, and you have to, we advise that you take it at the beginning before you do trading. Just take that mental training to get yourself focused, and keep that sustaining practice and part of your habit to maintain your discipline. Again, it's all about maintaining your positive attitude. Should be part of every trading day. Some people like to trade. They really find it relaxing and enjoy it in these 7 minutes where they can literally cool down and relax, and they do it in the beginning and every day. But at least once a day, I think you've got to get yourself in. You've got to meditate in some kind of way. I like self-hypnosis because it's. I'm not sure it's much different from meditating, but meditating to me sounds like a long, drawn-out thing. I like to give myself, boom, ideas and thoughts in a very short period of time, and get on with my ADD. And stress management. Maybe it's because again, the older you get, the more you realize that stress is your greatest enemy. You need to exercise daily to release tension. Get on the trading treadmill. You're on the trading treadmill and you got to get off it. But I put in the trading treadmill because if you get a chance, Google the trading treadmill. Some crazy guys years ago, and it's not only one person. There's 7 or 8 different versions of this where they've built like a little bridge over a treadmill, a walking machine, treadmill, a regular one that you see at the gym. And so you put it on a half a mile an hour or 1 mile an hour, and you walk while you're trading. The screens are up on a little table that they've made that bridges over the control panel. It's the craziest thing, but they say that releases tension. I don't think you have to go that far, but it looks like fun. But I exercise. I weight train 3 days a week, and I play tennis twice a week during the weekdays. So I do that all in the morning, starting at 8 o'clock every one of those mornings, so that I'm giving myself. I'm making sure that I treat myself and get my stress under control and get my head together for the day in a very positive way. Again, we talked about taking breaks, and you want to adopt a relaxation methodology of some sort, either a lot of you are engineers, and I know that because every time I do live a live talk for one of the exchanges, I'll ask how many engineers are in the room. It's at least a third. It's hard for a lot of traders to believe that things like meditation and self-hypnosis work, but these are proven sciences now. This is not stuff brought to us by an alien culture. This is real science, and generally when you wonder why something happened and it shouldn't have, it's usually something to do with thoughts and responses and out there. So let's go through them. Let's see. Here are them in a row in case you didn't get them all. Strength to pull the trigger. I'm just going to list them right up here. Again, visualizing your trading success, seeing yourself out on the boat like that, like I do. Have your own. Hey, you can join me on the boat. Whatever. If you want to steal my shot, go ahead. So those are your 9 that we've identified and don't look to attack all of them. Find out look at this list and say to yourself, which one is the one that's screwing me up, that's getting me off track. Is my focus? Am I having trouble taking losses? And then figure out what the right things you should be thinking. Okay, record that in your own voice on your iPhone, but start with the first couple of minutes saying, take a couple of deep breaths into the count of 5, out to the count. Make your own tape if you're not going to join my thing. I mean, do your own thing, but train your mind. Train your mind. Okay, take your affliction out and train your mind to be what? The wise and disciplined trader. Okay, I am the wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, Master Key 4. I want to leave a few minutes for questions. I'm going to take this for 6 or 7 minutes, and then we'll take some questions. For the Master Key, effective self-analysis and response. And there's only one slide, and it's all about journaling. Okay, I think the least important part of journaling is the statistical review of trades. It's important, but again, that you tend to do naturally. And if I woke up in the middle of the night, I think you'd remember every trade you made and every emotion you had. I think you'd remember it all. Because I think on my daily sheets and my monthly sheets, especially when I'm reviewing monthly, I can see from those patterns that my losses are big and my wins are small, but what you want are your wins big and your losses small. So I like to work on one thing at a time. When I worked on that, when I saw that, I said to myself, God, if I could turn that around, boy. And when I did, good things started to happen. So, you want to review the statistics of your trade. I saw somebody, and I hope you're on this call, on this webinar. Somebody emailed me and said, you know what, you've given me so much over the years. I don't even think he's a person in our program, just this free stuff. And he said to me, I want to show you the way I journal. And he showed me the way I journal. He'll take he has a slide with the chart he puts the chart on a not a PowerPoint, but what is it, with the data. I'm not, as you can see, I'm not, it used to be 1, 2, 3. Anybody remember that? Okay, well, he puts it on, he shows his chart, and he makes an observation. The market got to a point where it held resistance and it stopped at resistance, and it was a good time to short. And, it'd be a good time to short if it. And then he has conclusion. The conclusion is that it'll be a good time to short if tomorrow it breaks down. So he has an analysis and then a conclusion. Really like that. I really like that. So if you're going to do chart stuff, maybe that's a good thing. I have, in our course we give 99 journaling examples in one of our in the Disciplined Trader Mastery Kit. So I'm open to all different kinds of ways of journaling. But the most important part is that I think is your self-evaluation and critique. And here are some things that I'd like to see you do in this part of your journaling. You need to ask yourself, what did I do right? And then where did I follow? Where didn't I follow? So you're starting off positive. Again, here we go again. Starting off positive. It's like a positive sandwich. That's what I do everything, with a positive sandwich. There used to be a book called 4-Minute Manager, 1-Minute Manager, I think it was called, and it was a little tiny book. And it used to say when you brought somebody did something wrong, you told them all the things they did right first, then you told them where they screwed up, and then they told you how to fix it, and then you told them that they could do it, so go out there and do it. So it was like a positive sandwich with with the little bad stuff in the middle, like a bologna sandwich, and but without the bologna. You know what I mean? All right, so bad example, but what did I do right? So you say what I do. Today I took every trade my trading plan gave me. I pulled the trigger with ease, and I did a great job. Where didn't I follow my plan? You know, I moved my stop because I thought I was going to be taken out by the trading floor, and wound up that I had a bigger loss than I wanted to do. And so there is where didn't I follow my trading plan? What caused me not to follow my plan? I just gave you both in the right example. And then I commit to doing it tomorrow. Tomorrow I will not move my stop. I learned today, and I would be a fool if I did it again tomorrow and in the future. I'm a person that only has to learn once. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. So this is a great way to organize a quick paragraph at the end of your trading and at the beginning of the trading. And at the beginning of the trading, I reconfirm at the end of what I committed to. So today I'm the stop king. So this is the beginning of my journaling, beginning of the day journaling. What I'm showing you is end of the day journaling here. In the beginning of the day journaling, I would say today's the stop king. I'm the stop king. I will keep my stop and manage my stop exactly the way my trading plan tells me. Why? Because I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. That's a typical entry in my journal in the beginning of the day. So you get an idea. So all of you now have no excuse to journal, not to journal. So go ahead and start journaling if you haven't been journaling. Okay, framing your trading as a business. Master key number 5. Your trading plan is your business plan. Okay, I mean, we're in business. So your trading plan is your business plan, which is why I like you to have at least a statement in there about the fact that you're a wise and disciplined trader and you do the things that a wise and disciplined trader does. And sometimes it's fun to put that at the top of the plan, at the bottom of the plan. So as you read through it, again, a nice little sandwich, a nice little positive sandwich, because it's really all about running your trusted trading plan, and the way you do that is staying positive about the fact that it is a trading plan. Now, if your trading plan is not working and you're taking small losses consistently, it's time to stop trading and enter in what I call a buffer day, which is another thing that we talked about recently on other talks. Your time management as a trader, your day, what you should be spending your days and parts of those days on. And you shouldn't be changing your plan in the middle of the day. You should be running it as it is. But if it's not working, and you're seeing that after a week of trading or 2 weeks of trading, then you need to take a look at what's going on and take a deeper analysis. Maybe your triggers are not working in a specific market, or maybe you notice that some particular setup is not working, where one is working, one is giving you all the profits and the other one's taking it away and more. So take out the ones that aren't and do more of the stuff that is. I mean, sometimes the adjustments are very simple. Okay, it's all about the bottom line. You're in business. Okay, control your costs, which means control your risk. And diversify. You know, I'm not sure. I put the question mark because I think diversification. There's 2 ways of looking at it. You know, have a basket of things. Some win, some lose. But I always got confused with that. I mean, I understand that. But you're kind of taking the power out of the big hits in a way, but of course you're taking the power out of the big losses, and that makes it worthwhile. I'd rather be more specific and do more of the stuff I know that works, and stay away from the stuff that doesn't work. Whatever. But the diversification, I guess I put the question mark because I want you to focus on what works, not more than anything else. And clearly define your procedures. Okay. Which is really what we've kind of talked about all together here. And remember this, the business is just part of your life. It's not your life. You know, I used to walk out of the trading room. My wife would know if I had a good day or a bad day. Oh, my God, you know, don't talk to me. She would see me, you know, grumbling. Because if I lost that day or had a big win and I gave it away or whatever it was, something bad happened in my trading, I would take it personally. I was mixing my own self-worth with my count worth. And once you've got to keep it separate. This is a business. You should have a separate account for it. You should have a separate. You should compartmentalize it in your mind. Another mental training that we like to do. It's not your life. Your wife is your life. Your husband's your life. Your loved ones are your life. Your family, your kids, your whatever. Your charity work. You know, when I first met my wife, she asked me. I didn't have well. I was running a very large option firm at the time. I was just promoted to manager, and and I was feeling really good, and she asked me, you know, I was making good money, but I wasn't making the kind of money that I made later on in my career. And she asked me what I do, and I thought for a second. I told her I was a philanthropist. You know, I was feeling so good. I said, I'm a philanthropist. And, ever since I said that, I've always made sure that I give a little here and there, and that was 30 years ago. So it's not your life. Your life is about giving and seeing how much positive effect you can do. Trading is a way to make all of that happen if you can be disciplined about it. So I hope you've enjoyed the presentation. Here are the 5 keys in summary. A sound trading plan, proper risk and money management employee. Remember the triangles, and you'll get the recording of this. You can look at those charts again, hang them up. Reverse porch mental training habits. Again, you got to train your mind. It's science, it's not something way out there like the Milky Way, even though the Milky Way is a fact too. The Milky Way is shaped, incidentally, just like where we got the Fibonacci ratio. Another example of the Fibonacci ratio is the spiral galaxy. Effective self-analysis and response. You got to journal. You got to be real with yourself. Otherwise, you're only kidding yourself. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. Okay, and there's the disciplinedtrader.com. But don't forget, that's all you ever wanted to know about this being disciplined. And look at our mastery kit. It's the best piece of work out there for the last 4 or 5 years. We used to do live trainings or whatever. This way, people can do it on their own. There's a nice mastery kit. Takes you step by step. It's online. You get the online. You get a box of stuff. It's terrific. So that's the disciplinedtrader.com. And of course, if you're interested in the simple trading plans that I run that we're going to be offering in September, make sure you get on that list. Simpletradingplans.com. Just enter your name in there, and you'll be the first one to know. Because I can't work with a lot of people, and it's not an expensive thing. It's it's going to be affordable to everybody. So. If you're interested in that, you got it. All right, well, I guess, Kristen, can you see any questions that anybody's asking?
Let me go through and see if there's any specific ones for you.
Did you like that presentation, Kristen? I don't think we've ever been together before.
It was great. Of course I liked it. I've watched many of your presentations.
Shadowing me in the background.
You just didn't realize I was actually on the webinars. You didn't know I was the behind-the-scenes person. Okay, let's see. Sorry, I'm just trying to scroll through. Everybody's just saying great info, good stuff, great presentation, good, good, good.
Yeah, I think that was it when I asked them. That's probably during the break when I asked them how they liked it. I always throw that in. But, any questions that are new ones?
I don't see any new ones. I'm trying to go through and see. I don't see any new ones.
Looks like I've covered anything. And there's a lot of my people on this call, which is great, which I love, because, really all of this stuff is about repetition. I listen to other guys saying, it's not similar stuff in this, but like an entrepreneurial stuff. I belong to a couple of masterminds, and I pay big money for some of them, really just to hear, that I can do it, that this is something that I'm capable of, and that, there's positive things waiting for me, and all I have to do is organize my thoughts and make a plan to do it. And that's the same thing with you out there as traders. So stop searching for the Holy Grail. Find something that's first define the kind of things that you want, then go out and search for them. Give yourself a time limit, like a day or a week or a couple or a month. But once you've decided on a trading plan that can work over time, and then it's just a matter of training your mind, and that's really the fun part. The more you appreciate yourself, the more others will appreciate you, and the more life becomes terrific. So thank you, everybody, for being here. Thank you, Kristen, for having me, and have a terrific day.